We've got a short but sweet update for you, 19th of February. This is to make up for our bad call on Aquarius Platinum, as you well know. This is BARClays. We have a target up here, around 340 pence per share. We're currently 323. As you can see here, we've bounced off the support line quite a few times. We're now just, well, we had a test of resistance. It failed. Since then, we've had a pullback, which has had one of our bull flags that we love to trade so much. This should at least hit 340. We'll be back in a couple of days with an update for you on that one. Coal of Africa. This has been quite a hard one to chart at present, and there's been a lot of traders telling me how wrong I've been for wanting the downside. So we've had another look at this, and this is what we've come up with. We've got a little down channel. This is the best channel that the price has conformed to. You can draw a few channels, but this is the one. As you can see, it's hit resistance a few times. So if you have more than 2 touches, that confirms that that is a valid line. And the same with support. We've got a couple of touches of support. So I'm just drawing these quickly for you just to show. We've had a couple of touches. It's sort of bounced from support to resistance. We're currently at resistance right now. This is a bit of a back test. If it fails to get above resistance, it will hit that green line. If it doesn't fail and it actually goes and closes above resistance, then we will be buyers. So really, we're not going to want it to go up or want it to go down. We're going to let the market tell us what's going on and where it wants to go. This bear flag is still in play. Nothing has changed on this bear flag. I'm thinking that resistance is not going to break because the weekly chart for Coal of Africa still looks bearish. But at the moment we're at a back test. It's a little bit do or die for the share price. We'll be in the 15p trading range maybe by the end of the week if that fails to hold. If it closes above, we will be a buyer. Just while we've got your attention, a little shout out. We Make Mints is actually on Facebook. It may be worth logging on and joining because we post recommendations on photos and things like that, just as a quick update. If you are a user of Facebook, you'll get a notification straight away and you'll be able to look at the trade that we're making. There's all sorts of things on here you can learn from. Different charts we post. We don't always make a video and upload it to YouTube or the website every time that we post a recommendation. So sometimes they just go on Facebook. So it's certainly worth. There's quite a few things on here that will benefit people who want to trade. You can pick up things from us on here. So come on down and give us a like and see what you can learn from us. And one more thing, just before you go, do you recognise this little chart here, the gold chart? Confirming the date again for any of you disbelievers. We put out a sell recommendation at 1670. We said the price of gold, which is right here at the time, was about to crack, and look what it's done since. Literally, it was as if it was listening to us. They've done nothing but fall since on gold. So yeah, we want to have a little boast about that, and I think that that's worth a pat on the back and a can of lager, I think. That's not to say that if we don't get above this red resistance line, things might turn bullish short term. I don't think that's going to happen. I think gold is done. It's below the 200-day moving average as well. There will be little rallies in gold, which we want to be going short on, but you're looking at the top of the gold market. There's something within this pattern here that tells us that gold is really in trouble. There will be a tutorial on our members section. It's a pattern that we use to see if the top of a market is in, meaning that it's about to crash. And we see this pattern in gold. You heard it here first, guys.